Hello and welcome to NDTV Profit. Infibeam Avenues released their Q4 quarterly earnings on Thursday. The company's consolidated net profit rose 28% on year to 49.2 crore rupees during the March quarter, boosted by a rise in revenue from operations. The company's net revenue from operations grew 10% on year to rupees 743 crore in Q4. We have Mr. Vishal Mehta, Chairman and Managing Director of Infibeam Avenues, with us to discuss quarterly numbers. Good morning, Mr. Mehta.
Morning.
So my first question to you is that even though year-on-year income from operations has risen, on a sequential basis, it is a 19% fall in operating revenue. Where is this hit coming from?
Basically, Q3 is usually a seasonal quarter for us. You see Diwali and most of the festivals, they fall in Q3. So you'll see some seasonality coming in into Q3, where travel and some of the other activities, they pick up. And then you will sequentially see a little bit of dip in terms of the growth in Q4. So what you're alluding to is a quarter over quarter the same year, and there you'll see some dip. But you also see that in Q3, the credit card spend increases. So gross revenue, while it has increased, the net revenue is still actually the same sequentially. So while credit card spend increases compared to debit and some of the other payment mechanism, so you'll see the impact to gross revenue. But if you look at the net revenue in EBITDA, in fact, you'll see sequentially increasing quarter over quarter.
All right. In Q4, the take rate has improved to 8.8 on a yearly basis from 8.2 in the previous year. So with so much competition coming in locally and internationally, do you think you'll be able to grow your take rate, and what is your guidance for FY25, and how do you intend to maintain the take rate going forward?
See, we've guided the street that we want to go after double-digit take rate. In India, take rates have been low because of highly intense competition. If you look at our international operations in UAE and some of the other countries that we operate with double-digit take rates, actually in the ranges of 16 to 20 basis points. So I think take rate is a function of, simply put, how much we earn out of every transaction that we process in payments. And that will come through extremely sharp pricing so that we actually ensure that the merchants get the benefit and the customers get the benefit, ensuring that execution and discipline is sacrosanct to whatever we do, being highly compliant on every regulation, and ensuring that every transaction is having the highest level of efficiency and approvals. So I think we've been able to exhibit that for the last several quarters, and we've guided the street that we want to go to double-digit take rates in the coming quarters.
Is there a number that you can give us on take rate?
So I think we are at, in the last quarter, if you look at the full year, we achieved 8.8 basis points. But if you look at the last quarter, we achieved 9.2 basis points in Q4. So we think that, getting to 10 to 11 basis points is our goal for the coming quarters.
Okay. So because you mentioned UAE, Infibeam Avenues is the first Indian payment gateway to secure approval from Saudi Arabian authorities to conduct business. What are the specific objectives behind this collaboration with South Indian markets, and what would be the potential impact of these developments on market positioning and revenue growth in the coming quarters, if you could help us understand that?
Sure. Currently, our international revenues is less than 10% of our overall revenues. And if you look at UAE, we process about 1.1 or 1.2 billion dirhams a month. So while the transaction value is very high, we earn 16 to 20 basis points out of every transaction, which flows into our profitability. So, we are number two players in UAE. We have about 6,000 to 7,000 clients. And, we've been operating for more than 3 years now in the UAE market. Saudi is a very large market for us also, because if you look at religious tourism and some of the other activities, plus the amount of investments that Saudi is doing towards technology and digitization is very large. So we believe that that is significant. We are the first Indian company to achieve, a payment license from Saudi government and SAMA, which is the authority over there. And we believe that opening up Saudi, along with Bank Riyadh and some of the other acquiring banks in that region, we have completed localization of data. So payments is very localized, and you need to ensure that all the local compliances, regulations, and data security are in order. So we've achieved and we've completed that, and we've been able to secure the license. So we'll open up Saudi in this year itself. And we believe that it can be as big or even much larger than UAE. Since we process 1 to 1.2 billion dirhams in UAE, we can actually do much larger numbers. in Saudi Riyal, in Saudi Arabia, and in that region.
Okay, and how much revenue growth are you expecting coming in from Saudi Arabia business, UAE?
UAE alone, UAE alone, we have been doubling every year. So if you compare last year compared to this year, we believe UAE is doubled. We think UAE itself has a large opportunity. Saudi should actually be as large or even larger than UAE this year for us.
Okay, okay. And is Africa on horizon as well? Because recently RBI also inked a partnership with African authorities, Namibia to be specific. Are you looking at Africa as well in FY25?
Not in FY25. We believe that we are going to go into neighboring countries in the Middle East. So, for example, Oman, we power Bank Sohar, Bank Muscat. Some of the banks we provide our white label solution to such banks for acquiring purposes. We think our initial focus in 25 will be Middle East. We've
Okay.
opened up Australia and US as well. So we believe that those are the geographies. We believe in going deeper, ensuring that we get scale. I think if we are not getting scale, we're not doing anything important. So if we are in the number one, number two, number three players in payment, acquiring and payment processing in that region, then I think we'll go after that first before we go horizontal across additional regions.
All right, sounds interesting. So international business growth seems to be the theme for Infibeam Avenues in FY25, is it?
Yes, international and artificial intelligence. We've been, investing pretty heavily in artificial intelligence. We believe the capabilities that one can get by investing in this opportunity is significant, and there is a lot of synergies between payments and artificial intelligence. We opened up our AI platform called Thea, which is where it's visual artificial intelligence. So, which means that payments should get processed without you actually going to a POS terminal. I think, not today, in the future, that is what potentially will happen. And I think we want to be in the forefront of it. So we've opened up that framework. We are piloting with several clients at the moment. And both internationally and domestically, using AI and payments will become a big growth driver for us in 25.
Right. I was actually coming on to AI as well next. But before that, can you explain it to us that what are your total investments and capex that you're planning to build for venturing into business in Middle East in the coming couple of years?
So we've raised, in the subsidiary company up to $25 million to be able to grow international. That amounts will be spent towards three different activities. One is expansion geographically in Middle East, other regions of Middle East. Second is we've opened up Tap Pay, which is called CC Avenue Tap Pay, where you go to a merchant offline and you don't need to have a point of sale device. You can just download the app and somebody can tap the card on the phone and it works. So you replace the point of sale devices, and we think offline payments will be as big as online payments in that region. And third is express settlement. You see, you want to settle faster with the merchant so that they'll process more volume through you. And for that, we'll use our balance sheet to do that, because currently there is a T+1 or T+5 day settlement in the region. So we think if we combine the three things, it actually is a flywheel for us. And so capex geographically expanding in every region will be close to $5 million per country.
Okay, per year?
$5 million one-time capex to be able to do data localization and open up a country. That's about close to $5 million is a rule of thumb for us. Depending upon the region, when the scale is achieved, then you'll need to do some additional capex in that region.
All right, all right. Mr. Mehta, could you give us a sense of the enterprise business? Because I believe there have been some issues with the government marketplace. You have not been able to generate revenues from the government marketplace. So if you could shed some light on that.
Sure. We've given our frameworks to several enterprise clients, large enterprise clients, both domestically as well as international. And government e-marketplace, GEM is one of them. We had our contract up to December 2023, which is until the point where we recorded revenue. Government and GEM continue to utilize our frameworks and platforms. We've been fortunate to actually get an approval from them saying that intellectual property completely belongs to us and no one else. So far, I think it's a good perspective to have. But given the national importance, GEM will continue using our frameworks and platforms. We've not been able to conclude on the licensing term. So until we conclude on the licensing terms, we won't report the revenue.
Okay.
And in
Okay, so
Q4, we have not reported revenue. GEM.
Okay. So, but have you found a way to work out with the government in some sense? Are you looking to partner with government authorities on your AI platform to monetize the AI platform going forward?
Absolutely. I think we are very proud to actually be associated in part of building out the core technology frameworks for GEM, and being able to offer such opportunities that will serve a very important purpose is what we stand for. So, to answer your question, absolutely, we'd love to work on such opportunities. I think as far as this specific opportunity for artificial intelligence is concerned, there'll be n number of applications where government as well as large institutions can utilize. And with a billion CCTV cameras across the world, including India, many of them, I think we can do a fabulous job in terms of being able to generate such opportunities for enterprise as well as government.
All right, all right. So last couple of questions. Very recently, you received final authorization from RBI for payment aggregator license. So what kind of business in terms of loan total processing value are you expecting from this in FY25?
See, we've given guidance for FY25. We've said that revenues will come in between 3,900 crores to 4,200 crores with a PAT of 175 to 200 crores. That's about close to approximately anywhere from 25 to 32% increase. We've also guided the street that we'll cross $100 billion in processing volume across our payments and platform. We achieved 7 lakh crores in FY24. So we think that if we use the same trajectory and also based on our international growth, with less than 10% of our overall revenue, we expect that should be at least 30% of our overall revenue in the next 2 years. We think that we should be able to cross $100 billion in total processing volume between platforms and payments this year.
Okay. So one very interesting point I would like to touch upon lastly, Mr. Mehta, is the merchant finance business. I guess your key focus in this year is going to be merchant finance. What is your sense on the profitability of this business, and what is the impact on the return ratios that you see coming in the next some quarters?
Merchant finance is where we offer financial services to merchants. It could be credit, insurance, some of the other products as well that merchants will benefit out of. I think given the reach and we have added about 2,500 merchants daily in the last quarter itself. We have 10 million plus merchants on us. We can actually offer such services. We will categorize and segment them out at the right time. We will offer them under a new brand name, which is what we talked about. And we'll initiate that opportunity this quarter itself or early next quarter. I think the investment is not as heavy because we already have a fairly large merchant base with us. And we would like to, and see, products you don't innovate because products already are there. Credit is a product, insurance is a product, so you don't need to build products. But being able to distribute the products to merchants and being able to do it efficiently and in a way so that they benefit out of that, I think becomes a very important mode for us. So we'll offer that. There'll be contribution profit positive from day one. I think in terms of our returns, you see, as it will show up in the profit after tax, EBITDA and PAT. We've announced that we'll do anywhere between 275 crores to 300 crores in EBITDA this year. So we expect that as PAT and EBITDA increases, your return on equity as well as some of the other parameters will also improve. If you see sequentially, we've improved them, by 200 basis points. I think, with this kind of an opportunity, we should be able to increase that even further.
Okay. Okay. All right, Mr. Mehta, thank you so much for joining us and speaking with us today.
Thanks for having me. Thanks.